Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Presently, the Australian dollar bulls are tackling the key level or the 60-day simple moving average, which is at 66.15. In light of the current challenge here, we would need to see the New York close, and above here would see further expectations to the upside and look towards 66.65 and maybe on to 67 2025. Any pullback should now find support, I believe, around 65, 60, 70. In light of the current pattern here, the RSI is improving along with the MACD, so that does encourage further, or at least some confidence that the bulls are gaining further in their quest to re-establish the bull trend. Looking to economic data, according to the Australian Bureau of Statistics, the retail turnover or the retail sales in Australia has decreased by 2.7% in December 2023. This comes after a revised increase of 1.6% in November 2023 and a fall of 0.2% in October 2023. Besides that, we've got the Australian CPI this week and also January's employment report on Friday out of the US, which could give us further indication on how the markets are performing. And also the US Federal Reserve or the US Federal Open Market Committee kicks off its two-day monetary policy meeting, and with the conclusion on Wednesday in the US or Thursday in Sydney, it is widely expected that the voters will keep to a 5.25 to a 5.5% for the Fed fund target rate. Along with that, traders will closely watch Fed Chairman Powell's post-meeting remarks for any signals of a possible rate cut in March. Looking at the euro, as the dollar index, which measures the greenback strength against a basket of 6 major currencies, remains flat at 103.40. We can see that there is a little bit of a slide coming through here for the euro, but also I do feel from the region of 108.35 could see initial demand as the bullish divergence is kicking in. But keep an eye on this pattern, and with this potential hammer coming through, that could see the market rise up towards 109 and still holding to its objective of 110.45 to 55. The dollar yen pattern has broken down further, and you can see here we've posted an engulfing candle and therefore could see further stress to the downside, and along with that we did get the break of 147.5. If the bearish bias can strengthen further, then we are looking down towards the region of 145.80 as initial target, with any upside now likely to fail due to the heaviness that we can see here. And it's only a matter of time before the market falls further and eventually reaches its 144 objective. Sterling still maintaining somewhat a bullish bias as it keeps above the key level of 126.10.15. Looking to the upside, I feel once we've reached 128 figure 30, re-establish or at least assess the technical outlook, as we could be looking up towards 130. The price action for gold managed to increase to the upside and still potentially holds to a target around 2040.42, even though we did see a bit of weakness earlier late last week. Now coming into this pattern here, we can see that there is potential, if we do see both these indicators marry up, that we may see an extension onto 52.4. Any dips likely to be shallow. I mentioned in the report yesterday I felt there could be profit taking since reaching the objective of $78, and we're seeing exactly that. However, I'm not going to get bearish. I still feel from this inverted head and shoulders, further upside gains are probably likely to emerge, and therefore with the target holding around $81 to $83 a barrel. Any pullback, as we can see, extending, would find or expect support around 76.35. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest rate report. I hope you enjoyed the great start ahead.